Let's go, baby! We back with another video. Hope everyone's having an amazing day. Great trading day today. Um, did get kind of choppy towards the middle, towards the end of the day. We still got about an hour, a little less than an hour and a half till market close, but it doesn't really look very presentable, very attractive right now. So I thought I'd just go over trading day, what I thought, and at the end of the video, if you want to stick around, I'm going to show all my live trades as well. I was 4-1 today. One big mistake that went against pretty much all of our rules, but hey, it's a learning experience. Everyone goes through these trades, and I think it's very valuable to look back and see these mental errors because you're not going to learn unless you actually go through them. And I think the best way to really learn from these videos is if you have two monitors or if you just want to open up a chart and follow along with what I'm doing or pause the video as I'm kind of going bar by bar to test yourself. Okay, is this a good entry? Um, yes or no, and why, and then play the video again. Just pause and resume the video as you please because I mean that's what I'm doing right now as I'm making these videos, and it's how I practice. So I think it's very valuable for anyone to do that as well. All right, getting to the video. All right, this is about 6 a.m. on the right side when I came in today. Obviously, there was a sort of weak little downtrend followed by a rally up, so kind of setting the day up for a trading range day um, from the gun. Once again, I think one of the most important things is just to kind of talk to yourself and give yourself reasonings for whatever you're seeing. So when I came in, I drew this trend line. I said, okay, there was a break, couple legs to a new low, and the market's kind of just weekly going up until the market opened right around here. Obviously, now we can start drawing a uptrend. And I mean, this whole system is just based on trend lines, resistance, trading ranges, support. Anybody can learn this. It's at the end of the day a language, but it does get tricky if you, one, don't have your mindset right, two, don't follow your rules, three, overtrade, which is a massive one, and obviously a plethora of other factors. But if you really just stick to these rules and only take the very high probability trades that we talk about, you're going to be on the right side of the market 9 times out of 10. So let's see if we can get any second entry longs. There is a nice looking setup right here at about 523 pre-market. If you count from this new low, there's a first entry short, second entry short failure, which you can kind of count as two legs. And then you can, if you're counting from this high right here, you can say, okay, that's a first entry long, kind of a second entry long trap, followed by a bullish bar. So this would trap people going short too early, and also people who went long too early above this bar, because this is technically first entry long, second entry long, but it's not at the key entry point. First of all, it's not hitting the EMA, but because we are looking for a new high of this short-term trend, once we get another failure followed by a very bullish bar, you can take that trade with a lot of confidence. Okay, moving on. Here's a failed second entry short. So counting from this new low, going up, first entry short, second entry short failure. But this bar is massive, and you're still half an hour before the start of the before the opening bell. So I skipped that trade as well. It would have worked out, but it's always risky when you're gonna deal with those massive, massive bars. Okay? So now we get to the overnight highs, and obviously there's some resistance. So we're always looking for the high probability setups, which are second entry longs with the trend. Okay? When we have a triple top like this, we always want to reset the count. So once we go down and this bar breaks above the one previous, that's a first entry long. Once the next one breaks above that, that's a second entry long. But this is not very high probability setup because you're going right into the highs of the overnight session, and there's not very much room to the triple top right there, as well as the bar not touching the EMA. Even though it is a bullish bar, it's high risk, and you really don't want to go into resistance like that. It would have worked out this time, but you can't guarantee anything. Same goes for this bar right here. If you're counting from this new low, here's the first entry short, second entry short failure, but it's away from the EMA. It's a nice bullish bar, but once again, you're going to the highs of the day. It did work out, but it can't be reiterated enough that if you take those trades that are away from the EMA and that aren't very high probability, you're just not gonna be winning most days. Okay, going again. This was actually my first trade of the day. This short opportunity right here. Counting from this high, we see we have a first entry long, second entry long, failure, followed by a lower high. Once again, counting from this high, first entry long because this bar right here, yep, first entry long, second entry long, failure, lower high, bearish bar right here, because even though it did close higher than its open, look at the stem on that and look how far away it is from the EMA. It touched the EMA, it closed pretty far away from the EMA, and it was a lot of bearish momentum. And as you can see, the trade did go. My runner did get stopped out, unfortunately, but it's just how it goes sometimes. And now we see that we're getting into a lot of congestion. So at this point in my mind, I'm thinking, okay, there was a break of this uptrend, but we weren't able to test a new high just yet. So that means one of two things. Either there was just a straight up break and no test of the new high yet, which means we might test it later in the day, but also I did end up adjusting my trend line to kind of just have short-term trend lines, because which looked more like this. So we see a break of this, a new high, followed by a reversal. The reason I like to use short-term trend lines is because they always keep you on the right side of the market, and they're honestly a lot more helpful than the wide channels, because the wide channels are actually part of the reason why I got trapped or took a bad trade later in the day, as you'll see. But especially in trading range structures, you always want to use short-term trend lines, because the wider ones will just be more unreliable. Okay. And keep in mind, we're using a 2000 tick chart, so in every other time frame, people are trading, and they're seeing these thin trend lines as wider ones to them. And obviously, if you're going higher on higher time frames or tick or higher volume charts, it's going to be the opposite. But nevertheless, I really, really, really do like implementing these short-term trend lines. Okay, so now we obviously see that there's a change in the structure of the day. At this point, I'm thinking, okay, we'll probably test these lows. Nothing's for certain, but it's looking like a sort of trading range structure. Once again, let's draw a short-term trend line. Okay. Counting from this new low, we have a strong push up, one leg up, but followed by a leg down. That's the first entry short. Followed by this doji bar that broke above this bullish bar. And as soon as the next bar breaks below the previous one, that is a second entry short. It's a very ugly looking second entry short, but this is actually the second trade I took for the day, which I'll go over later. But obviously, you guys can see it yourselves. It's a terrible trade. The reason I took it is because I was just kind of getting overexcited and I thought that we're going to test these lows. But as you can see, if I had listened to these, my own rules, there's a break and a new low of this short-term downtrend. So we shouldn't even be looking for shorts anymore. Second of all, there's a short-term uptrend. We did not get any clear test of that. But once I saw this very bearish bar, it tempted me to go short. This bar, I used this neutral bar, this doji as my signal bar, which you should never do. This is a very rare trade for me to even take this because, first of all, it's a terrible signal bar. So I ended up using this bar all the way to the right as my signal bar as kind of a lower high, even though it wasn't one. But like I said, everyone gets trapped every once in a while. So now, we finally got a high of this short-term uptrend. And as you can see, we're kind of getting a trading range structure within a trading range. So let's just draw a range that looks the most accurate. Boom. That looks pretty accurate to me. But once again, let's draw these short-term trend lines. And going back here, here's a second entry long right there. But once again, if you had this trend line drawn, you wouldn't take that trade. I mean, there's a break and a new low, but it's in the middle of this trading range structure, and this bullish bar, even though it's a very bullish bar, like 90% of it's below the EMA. So whenever you're looking at second entry longs, second entry shorts that the majority of their body is below or on the opposite side of the EMA of the direction that you're looking to trade, they're not very high probability, combined with the fact that you're in the middle of this mini trading range and pretty much in the middle of this larger looking trading range as well. So if we keep going, we see it would have worked for a scalp, but not a very high probability trade. And once again, we're looking to fade the breakouts. So we're looking to sell at the top of this and buy at the bottom. Now, one might argue that this is a good trade. To be honest, I might have taken this trade. I mean, we'll see later. But we do see that this is a healthy looking little mini trading range. It's about a 12-point range. But once we do have this break, followed by two legs to a new low, so that short-term downtrend is over, followed by rejection at these lows, followed by very nice momentum and a lower high. This bar was kind of neutral, but I think just bullish enough to be pretty confident in that trade. And let's see where it takes us. Now, right here is a very tempting trade as well. Depending on how you drew this trend line, you can really consider this as like a little even mini trend, followed by a break because it was a higher low and a new high, followed by a lower high and a very bearish bar at the top of this trading range. I did take this trade. I ended up scratching the trade because of how my order was set up. So I have it set up so where I use limit orders, and once I reach 1.25 points, I have it so my stop loss goes at break even plus 1. So I was stopped out at like just one tick for my 3 contracts, but then once I saw another double top bearish bar, I actually doubled down on this trade, and it turned out to be a nice one. So once again, the reason we're taking these trades at the top of the trading range is because we always want to fade the breakouts. Those are the high probability trades. People who are trying to go long at the top of these ranges are going to get trapped 9 times out of 10. And once we have a first entry long, second entry long, away from the EMA, followed by a bearish bar, if the next bar breaks below this one, you can be sure as hell that everyone who went long too early is going to get trapped. And that's what ended up happening. So I believe I was done after the day. I was done after that trade. That was 1, 2, 3. No, I think I took one more trade. But once again, let's keep going and see what happened. A lot of choppiness, a lot of confusion, a lot of congestion. I believe this was the final trade I took of the day right here. It is a risky trade because we didn't reach the lows of this trading range, so there was a bullish divergence. We only went down to the middle of it before a lot of momentum up. But once we had, look at the importance of these short-term trend lines again. Once we had a break, attempt at a new high, followed by a very bearish bar at the top of this range where we bounced 1, 2, I don't even know how many times there, 4, 5 times. If there's this much bearish momentum, you did have to ride through all these bars, but with our method, we're putting the stop loss 1 tick above the signal bar. That trade worked out. So now, we finally bounce out of that range. And now we're looking for potential long setups because we went from the top of this range to the middle. We never reached the bottom, and we bounced out the top again. So that tells me that, okay, in the language of the markets, there's more bullish momentum than bearish momentum. All that does is tell you, okay, you want to be looking for long entries and entries that will trap traders going short. Let's see if we can find any second entries. Now, you can consider this a new high, followed by one big leg down, followed by one big leg up, followed by another leg down, followed by another second entry. So if we count from this high, we go down, first entry down, second entry long. I don't like trading like that because you can't be like incredibly certain which trend is that much more valid, because even though there is a bullish divergence, you would be going into this yellow line represents the just the open, and look how many bars are stacked right at that line, and you'd be going long right there with a bar that wasn't that pretty, but it worked out. Once again, we're looking for, now that we're trading below the EMA, now it's kind of telling us, okay, what's going on? We didn't make it to the bottom of this big trading range. We didn't make it to the top. There's just a lot of back and forth. Now, we do see this short-term trend, and a second entry short opportunity. New low, first entry short, second entry short, off of the EMA bearish bar, and it would have been a nice trade. Because we're also looking at this congestion, I mean, look, it went, I mean, I guess now we're really going bearish, but there's a trading range within a trading range within a trading range. Like, you can kind of see there's even another range that looks like this, and you can kind of argue that this might be more valid because look at all the bounces it had, especially at this midline. Let's get rid of that. Let's get rid of that. But if you do this, you can kind of see, look how many touches were at the middle, and that might explain why we didn't reach the bottom of this range. We were just wanting to test the top before ultimately going back down. Once again, this doesn't really help you that much in terms of the individual trades, but it helps you really know the market context and kind of keep in the back of your mind what is going on. What is this market telling you? Okay? A lot of congestion, a lot of congestion. Now, this does look like a trap trade. New low, first entry short, second entry short, failure. Failure again, trap above that bar. I don't know if I'd take this trade. It's in the middle of this range. I would honestly skip this trade. It might have worked out. Let's see what happened. It did work out, but I mean, look how many bars are stacked right there. Look how many bars. You can even kind of argue that there's another little range right there. If you're seeing it in real time, you might have something like this drawn, which you might be thinking, oh, like there might be a trap after that trap, because even say the next bar broke above this one, and instead of it being a bullish bar, it could have just as easily been a lower high followed by a bearish bar and another trap. So that's why I would avoid that trade. Now, once we do reach this top, we're not really sure what, because at this point we might not have this red channel drawn. We might, because we can see that this midline is pretty valid, and that would only be valid by placing it up here. But it wouldn't be until like this third confirmation where we'd really want to start looking for shorts. And speaking of that, once we do get this third confirmation with this bearish bar, if we do get a lower high, which comes right here, that does look like a tempting trade. And I'll tell you why. Short-term uptrend again. Break, high, lower high, very bearish bar. Once again, you would have had to ride this out, but if you had your stop loss of one tick above that bar, you would have been safe. Now, this is also sort of a repeat pattern of what we saw right here. Break, lower high, another lower high, and here, uptrend, break, lower high, or this was kind of a higher high of this one, but lower high of the very high of the uptrend. Once again, you would have to write it out, but it would work. These repeat patterns are there for a reason. It's language. We're speaking the same thing again and again and again and again. Okay. If we're looking at this new high, we see that we're going down. First entry long attempt, because this bar was an engulfing bar. You can kind of look at that as a second entry long. Failure, but or this one as even sort of lower high. You can count this as a lower high or a failed second entry long, but I would have skipped that because you're going short into the middle of the range. under the right context, if this was a very bearish bar off of the EMA, I would have liked that trade, but it would have worked out. But it's not that high probability. And once you get to this point of the day, it's 10:30 Pacific, 1:30 Eastern, like, and you see this much congestion, you really just want to sit on your hands unless there's a very, 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 very nice looking setup. Which honestly, this does look kind of nice right here. And I'll tell you why. Right there. Short-term downtrend. First entry short. You can, depending on how you look at it, some people do like to look at this as a second entry short just because there was double top, bearish bar off the EMA, room to these lows, at least for a scalp. Also, counting from this new high, it looks like a first entry long, second entry long failure. That's why you can kind of count it as a second entry long failure and a second entry short. And that would have been a very nice trade as well. And now we're really going short. And like I said earlier, we're probably just looking to test these lows because that's how trading ranges work. But enough of these charts. Let me show you guys the live trades that I took. Okay. Okay, this is my first trade. New high, first entry long failure, or first entry long, second entry long, push below the EMA, lower high, bearish signal bar. It worked out. Like I said, my runner did end up getting stopped out, which was unfortunate. But there we have it. Now, the next trade is somewhere around there. And this was the trade that I ended up doing terribly on. So, like I said earlier, there was a new low. I even had this short-term uptrend. I just counted that bearish bar, that big bearish bar as a test because it was a double top, followed by lower high, even though the lower high was a doji bar. Let me rewind a bit. So I kind of counted it as a second entry short if the next bar broke below it. Obviously, I'll learn from that mistake, but I should have never taken that trade. Okay. Now, the next trade, right around here. And see, look what I'm doing. I had this trading range, within the trading range drawn, short-term uptrend, break, new high. I know that it bounced once, twice. If there's lower high, I'm taking that lower high. Boom, place my limit order. Stop loss, one tick above the signal bar where that arrow is. Like I said, I did get stopped out at just one tick because it didn't tick through my limit order. And this is why you'll see I doubled down on the next trade because it ended up being another matching high, I believe, and a second entry long failure at the top of the range away from the EMA. Once the next bar breaks below, I was very confident in this trade. Okay, there's my first order, and immediately I put a second order in. And I ended up getting stopped out. And now my last trade of the day is about 20 minutes after that. Right there. Okay. And once again, this is a repeat pattern of what just happened. first entry short, second entry short, failure trap, lower high at the top of the range. There was a break of this bullish momentum, very bearish bar at the top of the range where we've bounced several times. I almost got stopped out once again. That's why we put the stop loss one tick above the signal bar. And the trade eventually worked out. But see what I'm doing? I'm not touching my stop loss at all. I'm leaving it there. If you're constantly changing it just because you're nervous as a trade is going, that means honestly maybe you're not ready to trade that size of contract depending on what you're trading, but I only ever will cut a trade short once I know that it's not high probability. To me, this was a very high probability trade, which is why I stuck with my guns and rode out the nervousness. But there we have it. All right, this was a half-hour video. Let's get it, baby. I'll be back tomorrow. Subscribe, turn those post notifications on, leave me some comments. Let's go, baby.